Presidential patterns, bearish. If we look at just the overall seasonality for the market, again, it's not too crazy, but in that presidential cycle, that post-election year, we know it's a bit rocky. Other things to keep an eye out in August is gold tends to be strong. I know gold had the craziest run over the last 2 years. It's been a little bit parked out since then. We did see gold spike here at the open. But seasonally, and it makes sense when people flee from stocks, they probably go to something like bonds or gold. So seasonally, it's a good time for gold. And also, if we look at the VIX seasonality, which Kane is a master of the VIX, he did an excellent lesson for that on the VIX for us a few weeks back. But VIX typically picks up again here. You can see August is the peak month for VIX, seasonally speaking, since 1990. It doesn't mean every single year, but it means on average, this is kind of what it looks like. So this is to be expected. And as you guys know, it just means we got to be more selective with our positions, with our position sizing. It's not like in April, it was awesome because everything was trading at a discount. So you could go in heavy and feel very comfortable that, hey, over the next 3-6 months, these probably will be higher than they are now. Right now, it's kind of the inverse of that. Things have really ran up. Is there still room for growth? There's always room for growth, but it might not be a time to be going all in on shorter dated options plays. But that said, I'm still trading it every day. It's just not a high conviction buying opportunity just yet. I did find this cool chart, and then Kane, I'll turn it over to you. I saw this big scary chart yesterday. It said basically if you own a stock and you hold a losing stock, and if it declines 10%, you need it to gain 11% to break even. If it falls 20%, you need it to come back 25% to break even. Basically saying cut your losers quick. Like, I mean, look at this. If it falls 50%, it needs to double from there to break even for you. I think this is something that we can flip on its head, and we did it with the Dream Portfolio a few months back. We try and do it all the time with our quote unquote catch up trades. But this chart was posted basically saying, watch out below. If you hold through a decline, you're going to be hosed. I like to think of the inverse. If you find really good stocks that are still at a discount, the upside is much higher than the drop was, if that makes sense. So like if you see a stock that's really good and it's down 50% currently, well, that means it's got 100% room for growth to get back to all-time highs. I think Carvana is like the perfect, I mean, it's a cookie cutter example of this. Obviously, no one could perfectly pick the top and bottom of that bad boy, but we've seen it go up 10,000% over the last 2 years. Well, that's only because it was down 99%. So I'd like to look at charts like these. If we do get a further drop here over the next couple of weeks, this actually turns into an opportunity for us, in my opinion.
Yeah, and the other thing that I would say about this is that this type of stuff, I like to apply it on a portfolio level and not
Right.
necessarily on a trade level.
Yes.
So we need to get out of this psychology that a trade has to break even or a trade has to win or a trade has to work out. So if you lose 20, 30, 40, 50, 60, 90% in a trade, don't feel bad, just cut it, and then your next trade can make it up. That's the whole point of having a portfolio. If I say, okay, I put $1,000 into something and I lost 900 and went down 90%, and you're sitting there waiting for that same trade to recover, it's probably not going to happen. You're going to sit in it a really long time, and then it's going to suck away your attention, your focus, and you're not going to be able to find or take advantage of other opportunities. But if you're saying, hey, I can get paid back by a different trade, then you can go and look for that other opportunity. Plus, I have a portfolio. So yeah, I lost 900 here, but I could still have $1,000 somewhere else that I can put in a different trade. And that way I'm not waiting for my leftover $100 to gain thousands of percent. I have my $1,000 that can just go up, 90% and make up for it.
Yeah.
Or a few $1,000 that only go up 30% and it makes up for it.
Yeah, definitely. And you are spot on. That is, yeah, that chart is applied to portfolio thinking, yeah, not to trading. So, well, Kane, what are you looking at today as the week wraps up and we have a down week officially? I mean, unless things really change crazy, but first down week in a while, it seems, or really corrective looking week in a while,
Yeah.
S&P.
So one thing that I'll share real fast is if we look at the pattern of this week, let me get out of extended hours. And This was, I mean, if you're paying attention, this shouldn't have been surprising. Okay, because basically all week long, we opened at a high and then closed either kind of mid-market or at a low, actually, on most days. So Monday was a little bit of an exception. It actually recovered to the VWAP. But if you look at every other day, Tuesday opens at a high, closes very near the low. Same with Wednesday, opens kind of close to the high. We did go a little bit higher, but then closed lower, and it did also recover to VWAP like Monday. Yesterday opened at high, closed low. This was a very distinct pattern this week. So there are signs of, yeah, some sort of catalyst or overnight news pops us up, but that was getting sold off. That is very different than the previous pattern. You see that? Open low, close higher, open low, close higher, open low, close higher. So that previous week was building up into this pattern until finally today we broke and we had that big gap down. The good news is we seem to have found a bottom so far right here, recovering up to that VWAP. So what you want to see if you're in the bullish case is a chop from here, or maybe a recovery up. A recovery up, it sounds a little optimistic at this point in the morning, but it can happen. If that VWAP breaks and it goes up, you're not going to fill the entire gap most likely, but at the very least we can get kind of close to where we opened up. So we will see how that develops. What you don't want to see is a rejection of that VWAP multiple times and that VWAP sloping down similar to this. Okay, that's what you don't want to see today, because that would get us to lower levels. But as long as 620 holds, then the market is decent shape for ending the week, and then Monday will bring something new and more information. But if we just keep going down, then that's not looking very good for the market overall.
Yeah. Any, or are you, sorry, I didn't mean to cut you off.
No, go.
Are there any stocks? It's funny. I was talking to my wife today because we, I give her money every month. I said, just buy these stocks. I give it to her so I don't have to look at it. And she was asking which stocks to buy this month. And I said, you know what? All of the stocks we got, they're not all of them, but a lot of them are doing great. They're cooking, like Meta, GEV. And she said, what should I buy this month? And I said, you know what? I don't really know which one's the best one to buy this month. I'm curious on your take on stocks that you like right now in the market.
Yeah. So we can go back over here. If we take a look at what the overall market is doing, so even if it comes down, I drew that 620 earlier this morning, but this is still a very nice uptrend. We have a little bit, depending on how bullish you were, if you're connecting these lows right here, okay, you can say, okay, we broke that trend. And so that is kind of the pessimistic case. If we break that trend, it doesn't have to go down. It could chop sideways. Right. And if you're less pessimistic, then you say, okay, well, I'm following that MA50 as my trend. And that is still a very bullish MA50. It's kind of barely sort of starting to curl over right here, but we're far from it going sideways or pulling downwards. So depends on the horizon that you want to take, and also the degree of bullishness that you want. So if you're okay with chop, and then you're looking at sector rotation. And then if you're looking at that longer term, then you're looking at basically you're okay overall. You're saying that I'm going to buy and hold. So I'm just looking for it. This pullback is a opportunity to get in at a better price. And then if it keeps on pulling back, then fine. It doesn't really matter. Personally, I would never average down into anything, but I would say if I still had cash available, I'd find an even better valued stock if it kept on coming down to this MA50. And then same thing all the way down to that MA200. That MA200, it's going to be hard to destroy this positive slope on that MA200 in the short term. So in a very long term, you would still be positive on the market. You wouldn't say, oh, 2025 is going to turn into a bear or a recession. So far, we have no evidence of that. Just like over here, even though we broke the MA200, that positive slope still existed. It sort of flattened out over here, but it kept on going up with that V-shaped recovery. So on the longer term, that uptrend held. So if you have capital to put at work, then it's too early, in my opinion. You'd want to wait for some sort of bounce and confirmation, either from the 620 level, or if we go down a little bit further off of that MA50, pick your favorite level. We're over here, our previous all-time highs. There is a lot of chop in this area for many months. So that is likely going to act as a very strong support over here. So I wouldn't be too concerned about a minor drop below the MA50 as well. So I like to look at sectors, sector rotations. And is there some sort of theme that I can see in the market? So the easy ones, the low-hanging fruits, are the ones that, hey, they've already been doing well over the last 6 months, and they consistently show up in the 6 month, 3 month, 2 month, 1 month. And let's see if there's any of those. Electric vehicles, blockchain, so crypto is in most of these, and same with defense. Okay, so those are areas that you could look for safety at the moment. And then if you're trying to look for something up and coming, then I would want to see anything that was over in the 1 week that is making it over into the 1 month, or you could even,
Payne,
if you're looking.
sorry to cut you off. Can you kind of walk us through what these different boxes are and what they mean?
Yeah, yeah. So these are sectors, so subsectors. So 40 sectors and subsectors, and we're tracking their return over the last day, 24 hours, or actually yesterday's close, basically, and then the close a week ago, a close a month ago, 2 months ago, 3 months ago, and 6 months ago. So if you see something on, let's just say all of these, then you know that there is money going into that sector. And it has been for the last 6 months. So the long-term prospects of that particular sector are very good. So that would be a very strong sector. Now, if you're only seeing it, for example, in the 1 week and 1 month, and maybe 1 day, then what you're seeing is, okay, this is potentially becoming a really strong sector, or I have early signs that there's a lot of institutional interest inside of these sectors. So I'm going to start paying attention, because if money keeps pouring in, that's going to bleed into the 2, 3, 6 month as well. And if I can catch that early, then I'm going to catch the initial move upward rather than the later move upwards.
That's cool.
So yeah, if you have capital working, you're saying, hey, I give my wife stuff to, money to pick stuff, then I would be looking for those types of opportunities. So it looks like a little bit more defensive right here. This is just reflecting the shorter term, the pullback that we're experiencing. So this isn't too helpful today. These short time periods. I'd be looking over here, one month, and which ones have the potential that are already in the 2, 3, and 6, or have potential to move up into 2, 3, and 6. What's interesting right now, the one that is a little bit of a standout right now to me is shipping. We have shipping in 1 week and 1 month. If we the theme of tariffs has been obviously dominating this year. And so if we're starting to see a turnaround, or at least optimism with those tariffs, and that the economy is going to be chugging, and that we're going to have international trade, then shipping is a great place to be. Obviously, mining, people, with the news on MP a couple weeks back, that's been a huge focus. And with AI and all of that, this being one of the pick and shovel plays for AI.
That's really cool. I wish I had that dashboard.
Yeah,
Did you
we'll
build that
see. We'll see.
yourself?
But I did.
That's
It took.
awesome.
It was not easy.
That's really
It was,
cool.
yeah.
Awesome. Yeah, it's funny. I told her, two of the stocks we had that weren't working out was AJG, which is insurance, and then Apple, which I just said, let's hold Apple through earnings, see what happens. But now it's just like I kind of like what you said with the MA50. That's where my marker is. That's what we've been talking about here on the opening playbook. And I said, let's just hold cash, see if we get there. Right.
Yeah.
But that was a really cool view that you had there to kind of see what's happening in real time with the different subsectors. Super cool. Um, as you guys know, and this is something we always say, but earnings can change everything. We have earnings season right now. This was the biggest week of earnings for the quarter, but that said, we're not done yet. I'll walk you through the different earnings names to know for next week for a couple of reasons. One, if you want to play them, but two, if you have trades in them, it's just good to know. A lot of time, it can be a dice roll holding through earnings. Now, this was something I saw yesterday. We've seen this was from Bespoke, great news sources actually, where I get a lot of like the seasonality charts from, and these charts are from Bespoke. They're awesome. Here was something they noticed: 54 earnings triple plays in the last 2 days. So triple beats, massive number of companies raising guidance right now, and very few lowering guidance. So overall, is that good or bad news? That's good news. Very, very good news. Yet the average stock has fallen 1% on its earnings reaction days with intraday selling. So we're kind of seeing a little bit of sell the news market. I think, Ken, you were pointing to that earlier. We'll see if we can get a buy. The dip market coming back here. But it is interesting to see that even with good positive earnings, positive guidance, still a little bit of selling the news. So keep that in mind as we have more earnings names coming up this coming week. Some big ones, some ones that I like. Well, Palantir, obviously a huge one. AMD has been a great stock, one that we've been trading a lot. It absolutely flipped on me today. I'm mad at AMD today, but ANET, another one, very similar boat as well. Shopify as well. So not a lot of the huge companies, but like Eli Lilly is a pretty huge company. They have earnings on Thursday, but a lot of those smaller tech, I shouldn't say smaller, still pretty large, but smaller than Nvidia tech plays coming up with a lot of opportunity as well. Open Doors, another one as well. So we've got a lot of action. This is the one I told you guys, if you remember, I said, remind me on Thursday next week to look at Block, which is formerly known as Square. It was ticker SQ. Now it's XYZ. Why they picked that ticker, I do not know, but whatever. They a lot of times we've traded the earnings for them a couple of times in the opening playbook, and you'll see big options orders mysteriously go in the direction that the stock's about to go right before the close. So remind me next week, Thursday, guys, to take a close look at XYZ, formerly known as Square. We'll see if we have any fun action there. Now, excuse me, as the week wraps up, one thing is for certain for us, and that's volatility should pick back up. And I've been telling you this, and we're seeing it today. VIX up 20% now in the overnight market. Seasonally speaking, volatility picks up, which, as you know, can be bad for a lot of different stocks, could be bad for the markets. But my morning trade that we've been taking, the 60-minute income trade, actually thrives on volatility. It loves volatility. As a matter of fact, this was kind of fun. Didn't happen, there wasn't a trillion different examples, but 9 times over the last 2 years when we did get an overnight VIX spike of 10% plus and we got a breakout in the opening trade, it won every single time, which is crazy to me. Even if you looked at a minimum VIX, like a floor in the VIX, when the VIX was above 15, so when it was not below 15, below 15 means lower volatility, lower movement. So when it's only if you only traded above 15, the profit, all of the stats say the same. You took about 150 less trades, but the overall profitability actually doubled. So there's just a huge, huge opportunity right now with this morning trade as volatility picks up in August and September. And that's because with the 60-minute income trade, we don't need the markets to go up. We just need to move in either direction, either opening, breakout, continuation, bullish or bearish. And that's all we need. And with more VIX, meaning more movement during the day, that allows us to hit our targets faster, which is obviously better for us. And that's why you see things like the profitability increase so much when VIX is higher. So if you guys want to take part in the upcoming trades each and every day this upcoming week, plus we're going to do 3 live master classes next week. We're going to do one on Monday, Wednesday, Friday, walk through the whole trade. I'm going to take you through more stats like this, more fun nuggets. We're going to walk through the indicator together, how you can use it on the S&P, how you can use it on multiple different stocks, and all sorts of fun facts for you. Well, Kane and I will walk you through that today. But before we get there, Kane, is there any final things you have for us this week before we move onwards?
Yeah, if you're playing volatility, not in a program like what Graham has, because he's taken all of this into consideration. If you're trying to do a directional trade with volatility high or increasing, you got to be careful with your stops. You can't just put those tight stops that a lot of people like to tell you about. So we always take our trading plan based on the overall market environment. One of the most important considerations is volatility in that environment. So a lot of people, so every once in a while I've seen a comment, oh, I'm down today and this trade didn't work out for me. Yesterday it was profitable, today it's not. And this is not an environment where you look at things like that. This is not an environment where you just stop yourself out. Oh my God, I was profitable yesterday. Today I'm not profitable. I'm going to stop myself out, because volatility means swings. And so at any moment, it's just like you saw the SPY bounce hard off of that 620 level, and now we're at 623 and a half. So if you stopped yourself out on something because SPY went down to 620, you're probably not feeling too good about yourself right now. Okay, so you want to be very careful with those stops, and stops are not a really good, useful tool in a high volatility environment.
Yeah, they'll get you absolutely cooked because the moves are just so big. So
Yep.
let's go ahead and jump on into this, Kane, and we're going to fly through this, give you guys a plenty of opportunity to join today, take action, and we'll have a full week of trades coming up and masterclasses.
Sounds good.
Cool. So guys, obviously the performances displayed here identified both real time and with back testing. So you can see all the results here. We'll walk you through them step by step, but you guys know this. We can't guarantee any future results. You can go to our homepage or if you want to see more information on that. With trading, there's risks. There's going to be winners. There's going to be losers. Actually, in the masterclass, I'm going to show you guys, there's going to be hot streaks and there's going to be dollar streaks. But in my opinion, you don't want to miss the hot ones. But with that said, not every trade is going to work out. Now, so far, we're averaging about 30% overnight or not overnight, every single day from these trades. That's including both the winners and the losers, with a win rate above 80%. But again, there are losing trades. So if you can't handle a loser, you probably shouldn't be trading with real money. Maybe start paper trading, or maybe don't trade at all if you can't handle a loser. Nobody here, not myself, not Kane, not Nate, will ever promise you that we're going to only win on our trades. With trading, there is risk. So let's go ahead and get started.
Yeah, all right, everyone. If you guys didn't know already, I am Kane Shea, and we're going to share with you a trade idea that could be worth $500 or more by Monday morning, even in this market, which is really cool. Yeah. So in fact, if things go as we expect, it should hit our account within the first 60 minutes of the trading day. All we have to do is set our position at around 10 a.m. and let the market move a few ticks in either direction. And as long as that happens, we should see a $500 return hit our account within about 60 minutes. Now, I understand that sounds a little crazy, but maybe a little too simplistic to actually work. But if we look at our trade from Friday, June 20th, anyone who used this unique trade could have set the position before 10 a.m., spent the morning at the gym, and come back just 60 minutes later to an extra $519, even though the market was ticking lower. Or how about the next trading day, Monday, June 23rd? Anyone who followed along could have popped in their trade right around that 10 o'clock time, met some friends for coffee, and then just come back 60 minutes later to an extra $511 as the market was going higher this time. Or what about the next one? Once again, anyone leveraging this unique trade could have set up the position around 10 a.m., spent the next 60 minutes walking on the beach, and then come back to an extra $512 while most people were just bleeding cash in another down day in the market. Sounds like this week. That's a total of $1,542 over the course of 3 trading days. And keep in mind, they did not come from a back test. They were not pulled from a study. These were real trades found and taken by our guest today. In fact, so far, these 60-minute income opportunities have been hitting with an accuracy of over 80%, and those are live trades. We get a new shot to target the next $500 payout every single morning, like on Monday, July 14th. Folks could have popped into the trade at 10 a.m., spent the morning at the range, and come back to an extra $500 sitting in their account. And then the next day, Tuesday, July 15th, anyone who set that trade up right at 10 a.m. could have gone and done whatever it is that you like to do with your mornings, and then come back a few minutes later to see an extra $511 while the market was going lower. And then on Wednesday, place the trade again at 10 a.m. $500 was banked before lunch came around. And the next day, Thursday, July 17th, in the trade at 10 a.m., another $500 collected over the next hour. And to cap the week off strong, Friday, July 18th, $500 pocketed just in time to head into your favorite lunch spot with friends. And here's the super cool part. Each one of these returns would have automatically hit your account in about 60 minutes within the trade. So that means you don't have to babysit your options, you don't have to time your exit, and you don't have to close that trade manually. All you have to do is set it up around 10 a.m. and then you're good for the day. Now, I admit that something like that sounds like it shouldn't be possible, but thanks to a unique anomaly that happens every morning, it's not only possible, but we're taking full advantage, and we target around a 50% profit every day, usually within 60 minutes. Now, let me assure you, this is not some silly gimmick. It is an anomaly that's in the markets around the world, and it's probably one of the most accurate predictors of market direction. And sadly, most folks don't know how to get it. And today, that changes. You see, our guest has promised to share the secret behind these 60-minute returns. And in fact, Monday morning, he will walk us through a brand new opportunity that targets roughly $500. But not only that, he's also going to show us how to stack these daily trades to target $1,500, $2,000 or more per week. And if that sounds exciting to you, then I'd like to welcome you to the 60-minute income plan. And if this is your first live event with us, again, my name is Kane Shea, and I've been active trader since the 90s. As a portfolio manager, my firm managed $1.7 trillion, and there's not a whole lot that I haven't seen when it comes to the trading in the stock market. But this new 60-minute income plan actually got my interest because it has all the attributes of a strategy